when you look at all the currencies worldwide, the dollar seems stronger now, especially against the pound, of course, and the dollar has been making some good moves over the past year or so. It's really, you have to look at it in relationship to one another. Look at all the currencies worldwide. This is just the strength of the dollar depends on the weakness of the other currencies.
Welcome to Rethinking the Dollar. Today I'm excited to have my guest, returning guest rather, Mr. Marco Jansen. He's an entrepreneur as well as a monetary educator and researcher over in the Netherlands. And today he's sitting down with us to give us his take on the whole Brexit ordeal and what he think may be ahead for the euro. And so without further ado, Marco, welcome to Rethinking the Dollar, or welcome back rather.
Thanks a lot, Mike. It's my pleasure, man.
Well, I appreciate you taking time to sit down with me, trying to connect, and definitely a lot of things going on, and I'm excited that you were willing to come back and join me here and give me your take on what's going on there. And so let's get into what's happening, the most important news. And I think it's interesting that you have a different perspective, being that you're in Europe, so it's a much different take than here in America, where we only hear what the news tends to feed us. So give us your take. What's your viewpoint on the whole Brexit ordeal, and what's the viewpoint from those in your region?
Well, there are two major viewpoints. Of course, we have the pro-EU group and we have the anti-EU group. So it's been let's say, a battle between two camps, especially in the media. And I think when it comes to the mainstream media, they were really pro-EU, and they still are, of course. And let's say alternative media is kind of leaning towards anti-EU, and that's what we've seen, playing out in the whole Brexit thing here. And I guess the let's say Leave camp was very strong with charismatic people like Nigel Farage of the UKIP, the UK Independent Party, yeah. And it's kind of a big bomb that he dropped, announcing that he was going to quit now that he fulfilled his goal. But yeah, I think two different perspectives. There are a lot more people right now, especially within, let's say, citizen groups that are turning anti-EU, because I think a lot more people are really getting the idea that the EU might not be as democratic as it, as it's purported to be. So I'm actually one of them. I used to be in favor of the EU back in the day. It was kind of mainstream and thinking that everything was okay with our system. But since I've been doing my monetary research and also some geopolitical stuff, my conclusions are definitely leaning towards exit. Like Brexit, I think, we'll get to that, is in my opinion a good thing. Yeah. And hopefully an exit, Netherlands exit, and maybe an Italian exit and a French exit might follow. But right. Let's see how things play out.
Right. Now, was it as much of a surprise for you that the vote actually was in favor of exiting? Because in the past referendums was more rigged, as some people say. So the fact that this actually went through, how was it something that caught you off guard, or did you kind of have a feel that was going to be the case?
Overall, I think I did have that feel that it was going to happen because of the let's say the growing protests throughout Europe and also in the UK. But let's say on the day itself, the polls kind of showed a bit of a lean towards this, a stay within or remain within the EU of the voters. So I was kind of doubting that day. It seemed like it was going the other way. But eventually, of course, next morning when I woke up, I was kind of cheering that they voted to anti-EU and voted in favor of the Brexit. But yes, overall, I was confident. But on the day itself, actually, because of the polls, I got a little bit led astray there.
Yeah. Now, that's in the past. Now we're 2 or so weeks removed from the actual vote. Now begins the process of the secession into the days ahead. So, give us your take on that, and what steps will be needed to kind of get, the UK back up and running again, and how will the EU hinder that, and just give us your take on that.
Well, I think when you listen to a man like Juncker, who's a big figurehead, of course, in the whole EU thing, he's kind of saying that he will not let them off easily. And what's going to happen first, of course, or what needs to happen first, is to actually start the process. And from then, it will take 2 years, according to Article 50 of the EU Lisbon Treaty. And it's a very short article, actually. But What it states is that they have a maximum of 2 years to negotiate the let's say the exit terms
Hmm.
for Britain in this case, for the EU, sorry, for the UK. And actually, the people in charge in the UK have said that they are not really speeding things up. So before this whole thing starts, it will take probably another 2 years before they're actually out of the EU, if that ever happens. Because maybe you know, maybe you don't. Your viewers might have heard of it as well, but it's not a legally binding referendum. So when push comes to shove, they could even stop this whole process.
Right.
So it'll be interesting to see what will happen.
So you say it's not a legally binding. So basically, against the people's vote, they're still. So I guess Parliament has a right to say no, we're not really going to do this. And so how does that, legally binding, not really, matter for the most part? It sounds like.
Well, if you have a legally binding referendum, then the government will have to do what will have to, let's say, act according to the outcome of the referendum. They should make that happen.
Hmm.
This officially is not a legally binding referendum, so this could mean that they could stop the process.
Hmm.
I don't know. I don't know if that's actually going to happen, but in the next 2 years, a lot can happen to actually stop this whole process. So let's just wait and see. If you look at the political playing field here, and with Nigel Farage, one of the most important people in this whole Brexit camp, leaving, and Boris Johnson, who's actually who was supposed to be the replacement of David Cameron in the UK
Hmm.
as Prime Minister.
Hmm.
He's probably not going to be that either, and he was, well, seemingly pro Brexit.
Right.
So there's a lot changing right there, and I'll have to see what comes next in terms of the actual start of this exit process and the 2 years to follow. I think it's a very interesting playing field, and it depends on a lot of factors here.
Right. Now, what do you think, in your opinion, and inspired those resignations from Carney and not Carney, but Cameron and Farage, because they both kind of came out the blue, it seems like. So what do you think inspired those, or were they kind of pushed out, or what are your thoughts?
Um, Yeah, it's sometimes it just seems that there's a deeper agenda here,
Yeah.
and that this may have been set up, and that Nigel Farage was actually one of the puppets in that whole process.
Yeah.
Now it's hard to prove that, so but what I tend to do in my research is to look at all those sides of the story,
Hmm.
and there are very good arguments in favor of that. That the whole thing is just let's say a theater show or something like that.
Yeah.
As I believe in the world today, politics is like a puppet show anyway, especially in the United States. I don't know if you agree with me, but the whole two-party system and Wall Street all over it, and financing both sides or all sides actually. I think it's all set up by the bankers and the corporations to have their own way.
Right.
This may be an example of that as well. I think it was kind of surprising to see Nigel Farage resign and announce it out of the blue just like that. He may have hinted at that in the past, but I thought, well, if he's sincere about this, then he would like to fulfill the process, and I don't feel like that at all right now. So, yeah, there are two sides to the story. I think it makes it weaker. It makes the process to come a lot weaker,
Hmm.
because we're looking at people who are now without a strong leader to lead them towards the exit.
Right.
So this might be actually a wedge between, let's say, the door and the way out. So
Right.
let's wait and see what happens. I'm not sure. Of course, there's a lot of speculation going on, but yeah, I think it's kind of hard in this entire playing field to see what the big agenda is.
All right. Now, speaking of, you mentioned bankers in your explanation of kind of who has probably a little bit behind, who's behind some of the things. But and I know the night that the whole vote came out, I was up late that night and I actually was checking the currencies and I saw that the pound was slaughtered immediately. And so I read today, or I think it's yesterday or yesterday, that all-time low, 31-year low type of thing. So the pound itself is being hit hard. What are your thoughts on that, and how does the actual currency devaluation process now begin, and where do you see it going, and what will Mark Carney do to try to save it, if at all?
Yes, well, of course, a lot of people expected that it was going to be a major blow to the UK economy,
Hmm.
and also to the banking sector there. So what Mark Carney already announced before the actual referendum was that he had £250 billion in his back pocket, waiting to be, let's say, quantitatively eased into the world here to save the banks. So it's one big monetary game, and the whole pound thing, as with the imminent collapse of the markets or what have you, I think we are seeing it kind of, go back to pre-Brexit levels now. Although today some of the stock markets got hit again, but I think what we're looking at here has a deeper cause. So when we look at the currency markets, what we see is quantitative easing, having been used, or excessive money printing by central banks trying to save the economy. I think that is one important narrative to understand for people. So also for the millennials, your target audience,
Right.
important to understand how this whole monetary scheme is being played out. And if you think of stimulating the economy, you would think of stimulating demand, and for that you need to have more income with the people. So people will have to have more disposable income to spend into the economy to make it grow. And to actually look at the quantitative easing system here and the method that they're using, they're actually creating money out of nothing, or digits, and they're handing it to the banks. But it stays within the financial system, within that part of the monetary system, and it does not enter the real economy, except when they're loaning to the market. And this is putting a heavier debt burden onto the people. So what it only does is it may stimulate demand temporarily when the banks are prone to lending out more money to the actors in the real economy, such as firms, corporations, what have you, and citizens. But eventually, medium and long term, it will raise the debt burden on people. It will also raise the interest burden, and in order to keep it within boundaries of repayment, let's call it that, the interest rate will have to be low. When the interest rate rises, the whole thing could collapse. I mean, there's a sovereign debt bubble of 100 trillion in the world. That means that when you look at the bond market, countries are indebted, governments are indebted at to the tune of $100 trillion dollars, and this becomes unbearable when the interest rates rise. So they will do, and that means the central banks, anything to keep this afloat and to keep the interest rates low.
Right.
So I think you also asked a point about Janet Yellen of the Federal Reserve and what she will be likely to do in the near future. I think this ties into that also. Yeah. It has everything to do with keeping the banking system and the markets afloat. And the monetary policy instrument here with excessive money printing is one instrument. Another one, of course, the interest rates and keeping them in tune is another one with derivatives, etc. So this is yet another point, but I don't want to make it too complicated here. But another interesting point to keep in mind is that the derivatives market, and derivatives are it's values like products, paper products, which derive their value off of some other asset. So let's say real value kind of is turned into speculation on future price moves, etc., of this asset, of this underlying asset, and that itself is a new contract, is a derivative. And the size of this whole market is 10 to 20 times the world economy, and that's what the whole economy is floating on. So imagine if that collapses. So this is a very interesting game here with all these monetary pillars kind of shaking on their foundation, and to me it seems like a big game that the bankers are playing to keep the entire system afloat and to continue to make money off of it, because that's what they do best. They control the money supply, and off of this money supply, they make a lot of money.
Right, and it's all at the expense of the citizens. So the citizens are the ones that bear the burden, as you mentioned, from debt earlier. Now, I've noticed a couple of things that's been in major news. It's a whole Deutsche Bank, their fast fiasco there, and then you mentioned sovereign debt as well. So, and do you think the EU and the problems they're facing right now, because here in America we still kind of have they're still trying their best to push the whole recovery rhetoric or whatnot, but it's dying down a little bit here because people are starting to really feel it. And so, but in the EU, it's mainstream news because of what's happening there. Now, do you see the EU situation worsening to where it'll kind of force the rhetoric here of recovery to change completely, where we may ourselves end up having to drop the interest rates and go negative, such as a lot of countries in Europe? Or what are your thoughts with that?
I think that might be it's a very probable scenario. I think also that's why I mentioned the bigger agenda behind the scenes here, the deeper agenda, let's call it that. It might be very, very relevant indeed, because Brexit might actually be convenient for
Hmm.
the politicians and for the bankers, in
Right.
the sense that, of course, Janet Yellen has been, when we look at the Federal Reserve in the U.S., I mentioned that before, and let's shift to that one for a sec.
Hmm.
I think when you look at that, Janet Yellen has been really in a fix to, let's say, make the markets recover, to bring recovery to the markets, and to promise them rate hikes, because this whole low rate, zero interest rate policy thing has become very, let's say, a very big blow to the confidence in the markets, because people expect, actors in the economies expect a rate hike in the near future. And of course, the Federal Reserve has been announcing that. But I guess the numbers in the US aren't very good at all. The jobs numbers, of course, I think they're manipulated. I tend to look at the statistics myself. And when you look at these statistics of the Bureau of Labor Statistics, BLS, in the US, especially the labor participation rate is dropping, is really tanking here.
Hmm.
And so a lot more people are dropping out of this whole labor statistic anyway.
Right.
So the fact that it's near 5% is already a very interesting factor in itself. Let's call it that. But Janet Yellen has been under pressure to raise the rates, and she's looking for a way out, to be able to say, look, now we have a Brexit. Ooh, that's going to be impacting the U.S. a lot, so we have to maintain the rates where they are, or even lower the rates, because Brexit. I can't help it. Sorry, guys. So to me, it seems that is very, very convenient. And the same thing in Europe, actually. Brexit now might be a reason for the European Central Bank to support those Italian banks that are pretty much failing. They're almost falling over. This could wreck the entire Italian system.
Hmm.
And so Renzi, Prime Minister in Italy, has already mentioned that he might need 40 billion euros to save the banks.
Right.
And there's been a lot of controversy, of course, in terms of bailouts within the world, not just Europe, but everywhere.
Right.
And we've seen the Cyprus example. And so they changed it into a new policy called bailed in. But depending on how you see it, it's always going to be the citizens that are hurt. The first bailout is, of course, using taxpayer money directly to bail out the banks, and the bail-in is really to use the depositors' money, basically, let's say the creditors' money, to save the bank.
Yeah.
So none of that is popular, and Brexit might actually be another reason to print money and hand it to these banks to keep them afloat.
Right. Now turn here to the United States a little bit. I remember, start of the year, I guess the expectation was to have at least what I think was four or so rate hikes. And it looks like, that won't be that promise won't be kept. So do you actually see or think that, they might slightly move it, or what's the direction of the interest rate? Would it go up or go down by the end of this year or head into next year? What are your thoughts?
My personal expectation is that it will remain near zero.
Hmm.
So I'm not. I don't think there's going to be a rate hike. If there is going to be one, it's probably going to be just a couple of percentage points max. But my personal expectation is that it will remain low. So let's say 0.25, or maybe even go down to zero.
Hmm.
But I think we also have to look at the U.S. markets then. If there's some more turbulence in the equity markets in the U.S. And if the labor statistics are getting worse, GDP growth not maintaining the same levels, then they will have more reasons to actually lower the interest rate, and that might bring it below zero. We might be looking at that below zero scenario towards the end of this year or next year. And the way I see it, there's really no way to stop this whole monetary policy thing. They're running out of options here,
Hmm.
other than to just let it collapse.
Right.
And if that's the case, then there's going to be a devastation across the globe, I think.
Right.
So I don't think they're going to let that happen, and they're going to do what it takes. And this might actually mean ZIRP, zero interest rate policy, or actually negative interest rates.
All right.
But again, it depends on a number of statistics here.
Right. So it sounds like the tools in their toolkit for keeping this thing afloat ultimately, leads down to just, more stimulus, more easing of some way. And do you actually think, I know a lot of people are talking about helicopter money and putting money into the hands of people directly, or what are your thoughts on that? Do you see that being something that can kind of prolong things to keep the citizens happy and, make them think everything is okay by they're getting, free checks or tax credits or what? What do you think?
Yeah, I see a lot more talk about this, even from mainstream financial, or let's say monetary analysts. that quantitative easing for the people, QE for the people, that's exactly what you mentioned. It's to create currency and to hand it to the people directly. Might be a feasible scenario, especially if the other monetary tools start to falter. If that doesn't work anymore, then they have the option to just print the dollar and the euro and what other currency you have out there into oblivion. But this will not be credible for a long time. So what they might what they might do is to say, well, listen, us saving the banks directly hasn't really helped stimulate the real economy. Exactly what Alan Greenspan has been saying for a while now, the former Federal Reserve chairman. He has actually been very vocal about how quantitative easing has not helped the real economy in the U.S.
Right.
And they might actually change the narrative to support that one and say, yeah, well, it hasn't worked out the way we planned, so let's give $1,000 to the households in the U.S., for instance, or maybe even more, to have them increase their ability to spend, and that will probably lead to some short-term recovery. But of course, it's another trick up their sleeve. But yeah, I think it could also help alleviate the debt burden. I think if you have to print money, don't give it to the banks, but give it to the people. At least that will be closer to a real recovery than the other option.
Right. And that
So
sounds like, a spike in the money supply injected immediately into the economy is going to lead to inflation. Now, would you foresee like, prices getting out of control, or do you see it being moderately increased and the BLS actually reporting on it? Or do you think they'll still continue to alter those numbers a little bit?
yeah, well, when it comes to the inflation narrative, there are a number of things to keep in mind. Inflation is actually the main driver is monetary inflation, so it's increasing the money supply.
Mhm.
And if if it keeps increasing, it will also drive up the prices. So rising prices are, in my opinion, more of a result of inflation. Let's say a symptom of inflation. But when you're looking at this measure here, if you hand freshly created digits, because that's what it is, they're not going to print paper and give it to the people, just deliver it to them in the mail or something.
Right.
But they're probably created out of thin air through numbers in a computer. And if they then give it to the people by putting it into their bank accounts, what people could do is either spend it into the economy, or they could pay off part of their debt. Now, if they do that, then this currency disappears. The debt lowers and this currency disappears, because actually it's like a bookkeeping thing, right?
Mhm.
Uh, it's just numbers.
Yeah.
And if you pay off the debt disappears, but the currency disappears also. So they kind of negate each other, and then it will not lead to inflation if that happens.
Yeah. It's good to
So
say. I mean, that's in theory, that sounds like a good way to kind of even the playing field and even all this out. But I got a
yeah,
good feeling that if you give a nice amount of money to some people, middle class and lower, they're going to spend it. Chance of paying
yes.
off debt will be not too likely, and so it'll basically just rush right into the resource sector and looking for goods. So, yeah, that's interesting. Now,
That's probably definitely also going to be a part of that. As a result,
yeah,
there will be more spending, and yes, that could drive up the prices in the short term. But if it's not big amounts that they're printing, I don't think they're going to hand everybody $1 million.
right,
So if they don't do that, then I think that especially in the short term, it will not have a big impact. And in the longer term, if they continue to hand some more people, let's say on a monthly level or something, if that ever happens, then people will also start paying off part of their debt, I think,
yeah,
and there will be a better equilibrium in the market with probably higher demand
yeah,
for goods and services. So that could stimulate the economic growth, which is what they want. They want 2% inflation, right? That's what the central banks want,
yeah.
and that could help them probably a lot better than the QE for the banks that they're doing now.
Right, right. Now, let's talk a little bit of politics here in the States with the whole presidential election. I would love to get your take from the other side of the waters looking towards us. Now, we're kind of down to, two candidates, Hillary and Trump. And here, in my opinion, and it's been they're making a mockery of, democracy and politics in general because, they're it's just all about them. It's not really about the people and true issues. So, first, Hillary, the whole FBI thing, she's, guilty but not guilty. She's not going to get convicted, but even though she should. What are your thoughts on that whole FBI, verdict that came out, I believe it was yesterday?
Yeah, it's interesting. I've been following the Clintons from a distance for a couple decades, ever since. Yeah, it's been a couple decades, I guess, since Bill, of course, was president. And let's just say that I really don't trust that family that much. And Hillary, same thing. I think, well, to me, when you look at her actions and when you look at what she's been saying over the years and how she has changed her narrative number of times to contradict now what she used to say a little while ago. You could call it a big liar. You could say she's a big liar. You could also call it, well, it's politics and she's just changing her narrative to gain votes. I'm leaning towards the former. I don't think it's. I don't. She doesn't seem like a very nice woman, and I don't think she has the best intentions for the American people. That's my personal opinion.
Right.
Of course, it's hard to support that with facts other than showing like what did she say 10 years ago and what is she saying now. That's completely opposite from one another.
Right.
So yeah, when you look at those simple facts, you could call her a liar, but that goes for many politicians in Europe as well.
Yeah.
So yeah, I think it's basically between Trump and Hillary Clinton. It seems like a whole well, a big theater show, and the Wall Street banks actually control this behind the scenes. In my opinion, they control the general direction, and whether it will be Trump or Hillary. I think in the alternative media, Trump is supported more in the sense that people think that he is truly independent, and even though he's saying some radical things, that he might actually be able to help the U.S. In arming the U.S. To the teeth, and even more warmongering or what have you. But I don't really buy all that. I think it really doesn't matter, in my opinion, who's going to be president. I
Right.
think the same agenda is going to be behind this. If I may, let's say give a book hint to people, to your viewers.
Please do.
Sorry.
No, please do. No, please do. Please.
Oh, all right. So yeah, that it's All the President's Bankers by Naomi Prince.
Right. Familiar with that one. That was a good book.
Yeah, that's. I think it's a very interesting one, and there are many others that actually are connecting the dots between, let's say, the financial establishment, the big banks, and the presidency over the past decades, and to show that there really is a big influence from bankers on the general direction here. And I think whether it be Hillary or Donald, it doesn't really matter that much. There may be some different policies here and there between the two of them. There may be some alternate policies, but I think the same direction will still play out for the
Right.
U.S.
Right. Now, before we draw this to a conclusion, I would be remiss if I didn't get your take on precious metals and how that at the last couple of week or so, the price has really increased and gave a lot of promise to those who've been, riding the bear market for quite a while. And then also, give us a short view take on the dollar, the Federal Reserve note itself. How will all these market things kind of play into that in the short term and long term?
Yeah, that's definitely interesting. I think when you look at all the currencies worldwide, the dollar seems stronger now, especially against the pound, of course, and the dollar has been making some good moves over the past year or so. Yeah, it's really you have to look at it in relationship to one another. Look at all the currencies worldwide. This is just the strength of the dollar depends on the weakness of the other currencies, and vice versa. So what they've all been doing is really devalue the currencies. They've been printing so much, and not just the quantitative easing by the central banks, but also all the bonds that have been created, and all the value in terms of dollars. Look at the enormous reserves in dollars, in dollar values, in bonds, etc., held by other nations. China is holding major reserves in dollars. Now there's a lot of, let's say, monetary value created there, or monetary paper created, and I think eventually this will all have to go down to zero, or so hyperinflation or whatever you want to call it. But this is probably across the board. All fiat currencies in the history of the planet that we know of have failed eventually, and I think this will also happen to the dollar. The dollar will likely fail eventually, but maybe it will be stronger in the short term because of the hits that the British pound has been taking, and also the EU is not a strong currency. Or sorry, the euro is not a strong currency. It's built on a very shaky foundation, and even people within the EU, politicians, admit to that. So I think the dollar might be strong for a couple of years to come, but eventually I think they will have to be reset, and they will have to add or actually take away a number of digits.
Hmm.
They might have, as Jim Rickards puts it, they might have a temporary global reserve currency taking over in the form of special drawing rights
Hmm.
of the IMF. That's like a basket of currencies where the dollar, the euro, the yen, etc., are actually weighed in that basket, and collectively they determine a sort of value. So the SDR might also take over in international monetary traffic here to cover for the loss of all the currencies worldwide. But eventually, I think there's going to be a major shakeup in currencies across the board, and there will be short-term moves between the currencies and value between the currencies. So now the dollar will probably be strong for a little while, but some other things will probably happen to turn that around. And again, longer term, or let's say 5 to 10 years, I see this whole thing collapse like a house of cards, to be honest. And to get back to your first point, your first part there, precious metals.
Yeah.
I think there's a big role for precious metals. I've never been a gold bug in that sense. I think it looks nice. Gold and silver just look nice, but I'm not. I don't suffer from a certain disease where I got to have the stuff. But I'm kind of collecting some coins here and there. Let's call it that, to really have hold to really get a hold on certain bullion, at least a little bit of that. I think it's wise for people to do that, as you've seen in this whole Brexit thing, and the other monetary developments. Gold and silver really have a tendency to go higher, and I've been doing a lot of research over the past years into the COMEX, the commodity exchange, and the role of the banks in keeping the let's say manipulating the gold price downward, keeping it down.
Hmm.
I think this scam, if you will, because I think that's what it is, will eventually be played out, will come out, and that will really raise the value of gold and silver bullion, and the paper stuff will be actually worthless because they're already leveraged like 100 to 1, right? I think off the top of my head it's like 100 to 1. So for every ounce of gold, there are about 100 claim checks in the exchange traded funds. So that's people and institutions trading the physical stuff, but only in paper. So that's like a big leverage here, and this will have to really culminate into the rise of the gold value eventually, and probably a very big one too. And silver, same thing.
All right. Well, Marco Jansen, thank you for sitting down with us again on Rethinking a Dollar.
Thanks for having me, Mike. It was again a great pleasure.
Sounds good. Look forward to staying in touch with you, and we'll keep it going. Hopefully, we'll hear some good news sometime soon.
Yeah, let's hope for that.
All
Thank
right.
you.
Be good. Thank you. Well, this concludes my conversation with Marco Jansen from the JansenReport.net. Hope you found it to be informative as well as educational. Click the subscribe button for more RTD interviews and monetary news updates, and feel free to share it to family and friends so they can be informed. Looking forward to bringing you more interviews. Until next time.